For those that are new, I know that I see Kevin. Welcome, Kevin. Um, every single week, we usually have just a weekly meeting from time to time. And the reason for these meetings is obviously for new folks to see what we're doing from a business perspective, but also just to make sure that we have some type of cadence. We are a sales and marketing organization when it comes to real estate and finance. And so I usually like to just have these weekly meetings to make sure that if there are any ongoing questions, that everybody has a chance to just connect with me live because it's during the week and for other times because I'm still producing. Me and myself and our team are still producers. We still handle a lot of our business, but I like to for those that are open and available. We like to have these weekly meetings to catch up, discuss strategies, to kind of catch up on deals, and just to figure out, what works best, and so I can help each and every one of you. So currently, right now, Kevin's new, but some of the others like Rick, welcome Rick, Asta, Alan, they previously joined over the past few months. And so currently right now we have roughly about 80 or so members part of our team all throughout California. So, and these members are just normal individuals looking to get into real estate and finance and looking to either make additional revenue or seeing this as a long-time term career in being a licensed real estate agent or a licensed a loan officer. So just real quick, Kevin, if you haven't already, feel free to visit our website. It's the fernandezgroup.com. Talks a little bit more about what we do, what we specialize in, but we are both. We are what you would call a dual brokerage. So the company started off as a mortgage finance company first, focusing on real estate finance. And then later we built the team out for the real estate side. So we actually are licensed as both a mortgage company and also a real estate brokerage. So a lot of what I do, I like to think of it from a not a transaction perspective, but but in terms of how can I help my clients best. And some of the clients that we focus on here will range anywhere from your traditional home buyer, home seller, all the way to investors. And so that's who I specialize in. Nonetheless, many of our team members, they're just starting out, just like anybody else that's looking to get into the industry. But as time goes on, you're going to want to find out your niche, right? What that means is who do you want to serve? What's the marketplace out there? And I believe you're out there in the Crockett area, I believe, in the Contra Costa area. So we can always game plan to figure out what could be the ideal niche for you in that particular sector of the area. We're based out here in San Jose, so that's our primary market is Santa Clara County, and then obviously Alameda County, San Mateo County, and then we have reps in various counties, Solano County, San Benito County, San Joaquin, Contra Costa, and so forth. So but I wanted to make sure go to our website, thefernandezgroup.com, learn a little bit more about us. But I'm going to jump right back in here. This is what you would see if you see my screen, guys. I'm just going to cover this real quick. This is our what you call our online community, and so this is where everybody has a chance to just stay up to date in terms of the market. Usually, I'm posting either trainings or news that can help educate our team members in terms of the market and the rates and the interest rates. It's very important from just a rep perspective to understand what the market is doing. And so whenever you have when you have access to a community like this, just go ahead, click on the icon, and then it'll provide you other links for further details of that particular post. Okay. But also within here, this is where all of our reps access training. So depending on what level you're at and what level experience, some are already part of our community, some are licensed agents, most of the team here is non-licensed, and you can either be licensed either on the loan side or on the real estate side. So there are two designations that that individuals have an opportunity to pursue. Obviously, as a company, we have both. I'm licensed both. So that's definitely an opportunity for those that are looking at just taking advantage of not just the real estate side, but also the real estate financing side. From my perspective, the real estate financing side is is an important part of any transaction. So nothing closes unless your client has financing in place, and not just any financing. Some of your clients are going to have much more complex scenarios, right? Business owners and investors, they deal with their own finances, and they can't necessarily walk into a bank and say, "Hey, I need a real estate loan." They have tax returns for multiple revenue streams. They have maybe they don't have a W-2 or maybe they don't have a paycheck. So how can a bank qualify their income if they don't have the traditional types of documentation? And that's what we specialize in. So again, our market from, we started this business back in 1999. So we've seen a lot of ups and downs, but the main thing that we've seen is that there's always investors in the marketplace that are buying, selling, and financing projects. Okay. Um, so in this particular area, Kevin, this is our which are what we call our dials to deals group, and then you'll have access to posts to help you stay updated in terms of the business itself. But also, if you have questions, this is a great area for you to post your questions, general Q&A, um, loan scenarios, real estate scenarios. Okay, those are all areas where you can just go ahead, go into the particular channel, and then ask questions. Also, if you have access to our community, you get access to training. Okay, so when everybody starts out, you get started with the Fast Start Foundation, and this will cover about 28, I believe now it's up to 28 lessons. And the lessons with this particular role, so most of you have joined as what we call our sales development rep, which is our unlicensed role. And so the main goal of the sales development rep is to generate business. Okay, so that's the main part of working in this particular industry is to learn how to generate business. And there's a lot of different ways to generate business. I myself, because I started off before the internet, I'm used to just making calls. Okay, so I'm able to just pick up the phone, make about 100 phone calls, connect with people, connect with strangers, and have a conversation with them and see if one that I could help. Okay. Obviously, the new generation of today, they like to network, they like to use social media, which is great. You've got to find that niche. But what I have found to be most effective, if you don't have access to technology, or if you're not very good at social media, or if you can't be consistent, is just to make sure you have conversations on a daily basis. Okay. So within the training, Kevin, we have what we call our fast start. So you've got scripts, you've got examples, you've got playbooks, and then you also have industry overviews in terms of this is who our customer is, this is what we're trying to go after, and this is why they want specific types of financing, in particular real estate. Okay, so it's the who we're targeting, it's the how we approach them, and then obviously what's the next step. So it goes over just some tips and high level um, information. This is not designed to teach you the whole entirety of real estate or finance. Okay, that will come. But the most important thing that I want all of our new reps to understand is just how to understand what your scripts are, have a qualification with individuals, and then have them scheduled with our licensed team. So as a sales development rep, right, your main focus is on generating business and then scheduling business for our licensed team. And then from there, our licensed team will take care of the rest. So in let's say corporate terms, it's what you call the hunter Skinner model. You hunt, then we skin. Okay. You bring us the business and then we help you to close the business. Right. So it's a model that we've been using for the past 30 years. It's quite effective. Now, for those that are looking to move on to become licensed, great. Go through the proper licensing channels, get educated for that, take the courses, take the exam. Fantastic. But once you get licensed, it still goes back to the same model in terms of how do you generate business. Okay, so I'm teaching you how to make the money first, and then all the details come later as you start to get a little more serious about this career, about this industry, and that you decide, hey, you know what? This does make sense. I like what we're doing. Then I definitely want to get licensed to take on more of the responsibility. Okay, so that's how our model is designed. It's designed to bring in people to focus on the most important aspect, which is bringing in the business. And then as you start to get licensed, great. Then you just handle more of the transaction. Okay. Um, but I want to pause right here real quick. If each and any one of you, Alan or Rick or Asta or Kevin, are there any questions that you have at this point? Okay. No questions? You guys understand that?
Hey Perry, how are you? I just have a
Good.
quick question.
Yep.
Um, Regarding like the licensing and stuff like that.
Yep.
What if, you know, for instance, what if you want to get licensed in both loans and real estate? Is that something doable, or is that something that, you either pick one path?
No, you can. The way that I have it set up, it is I have my real estate brokers. Okay, so you have your real estate, and then I took the loan officer exam to attach it to my real estate license. Okay, so you can do both, right? You can be both, but you have to pick a path, right? So if you want to do both, I would say take your real estate license first, okay, and then you add the additional loan officer education to have that, what you call the NMLS endorsement, attached to your real estate license. Okay,
Great. Thank you for explaining that over to me.
absolutely, absolutely. Any other
Hey
questions?
Perry, I have a
Yeah,
question.
yeah, Kevin. Yeah,
Um, how much of the role is inbound leads versus outbound prospecting?
yeah. That's a good question. Part of what I train on is how to do outbound. Okay, so as an independent, so everybody's an independent contractor, as if you are your own independent business. And so, from my perspective, if you want to be successful in this role, you've got to learn from A to Z how to do outbound, how to generate your own business. Okay,
Okay, sounds good.
absolutely. And so, again, I think when you're talking about inbound, um, you want to be able to understand how to create the inbound. Okay. And so, in order to create the inbound, you have to have some type of outbound first. So, it's whether or not you are calling referral partners, okay, building up that network. Because at this point, that's how my business is ran at this level over the past, so many years. We've made connections out there in the marketplace, and now we get referrals coming in. But that wasn't right away. It was just years and years of just connecting with people, serving people, outbound, a ton of outbound at first, and then at some point, then you start to get inbound. So a lot of outbound. What I mean by calls, you can do social media if you're good at social media. You can do paid advertising, but again, it's all investment. And so when you're starting out, especially for those that are looking to be masters at just the lead generation aspect, it's either you have time or you have money. Okay. And although I understand how to run Facebook ads and YouTube ads, That is probably about 20% of my business. I would say a good 50% of my business is by referral. Okay, so 20% is Facebook ads, and then I'd say another 30% is through distribution. Okay, so and I don't want to go into too much detail about that, but you've got when because you're looking at this as an actual business, you've got to decide, what do I have more of? Do I have time or do I have money? And for those that do have money, fantastic. I would run if I had, and so I had done when I first started off, and I wanted to expand over beyond and just just cold calling. Cold calling was very effective for me because over the years you get good at it. Okay, if you're doing 100 calls a day, okay, that'll take you about 4 hours. It's about 25 calls an hour. Okay, and out of those 100 calls, you should be able to connect with at least 10 people. It's 10%. Okay, out of that 10%, out of those 10 people, you should be able to find one or two that has a need. Okay, and that need could be either they're looking to buy real estate, they're looking to finance real estate, or they're looking to sell real estate. Okay, I have found that to be very effective. It was free, and my phone was with me all the time, so that's what I did when I first started. And I was what 20? I was 22 when I first started, so I didn't have a network, and I certainly didn't have a lot of money. Okay, but as I started to close deals from those cold calls, then I just reinvested some of those portions of my profits into, at that time, direct marketing. Okay, so I did a lot of mailers. And so mailers nowadays are much more expensive. They're about 80 cents a stamp now, 80 cents to a dollar. Back when I started it, it was about 30 something cents a stamp. So again, I think over time it costs a lot more, but direct mail was effective. And then we started to run Facebook ads, which if I were to start off and I had about $500 a month, I'll normally run Facebook ads, Facebook lead ad campaigns, and then just get good at that. Okay, so that's how I progress from cold calls to doing direct marketing and then doing running paid ads. And so I mean, but I actually learned how to do it. I didn't pay somebody else to do it for me. I actually went on YouTube, ran, purchased programs, read books to understand how to do it myself. And that's what I believe that you need to understand if you want to be successful in not only as a sales development rep, or if you want to be successful at either a real estate professional, real estate broker or mortgage broker, you need to understand how to actually do it yourself. Because the better you're able to do it yourself and you do have budget, then the better you're able to delegate that to somebody else, making sure that they're not taking advantage. Right. So again, that's how I learned. I just did it myself, got results. And then if I wanted to outsource it, great. At least I knew that I could outsource it and understood how it actually worked instead of just relying 100% on somebody else to do it for me. Okay? Because um, I think in this particular business, if you want to really run this business and I want to say it as a business owner, okay? As a business owner, your mindset is a little different. Okay, you've got to think of it in terms of not just what you know, but who can also help you to do it, and then how you can allocate your financial resources to get things done. Okay, but also Kevin and then Alan, we do work from what is called we have our own proprietary what is called our CRM. It's our all-in-one CRM, so you can see some of the components here. Not everybody, as a sales development rep, gets access to it. We're actually moving towards a paid plan for those that are licensed, okay, to get access to everything that I have access to, okay? But as sales development reps, for those that want to use our system temporarily, you do get a seat for those that are active, okay? And obviously, I monitor these. So again, I do give everybody an opportunity to say, hey, if you want, And I encourage, this is the pathway for all of our sales development reps. If you if you want to generate business first, you're going to start making calls. Okay. Now, in our system here, we can help you to design a list, and then we'll give you a seat on our system, and then you can go ahead and make calls from our system itself. Okay. Now, some individuals are okay with using their own phone, which is okay. You can do this business with or without the system. You don't need the system to make calls, right? Just use your own phone. So everything I'm teaching and training all of our reps to do is very independent. You don't need a lot of tools. You don't need to invest a lot of money, but you do have to invest your time if you don't have a marketing budget. All right. But good questions. But how's everybody else doing? Rick, Asta, how's everything coming along with you?
Hi, hi Perry. Hi everyone. So yeah, I am majorly doing on Facebook like the social media and the calls both. So I have not been able to get any major breakthrough through the calls, to be honest. Uh, I do not know how, but this is such a coincidence that I have been able to get connections through Facebook. And the last call that we had, Perry, that person wanted to sell his property in Sacramento. And I think the other day Albert was not available. So, uh, sorry, I'm slipping the name. Who took the call? Just a second. I forgot.
Yep, Hector. So I did have
Hector,
a
sorry.
conversation. Yep, I just did have a meeting with Albert and Hector on Friday, and then
Yeah.
so this is a project in Sacramento. It's a 6 unit. Okay, he's not ready to quite to sell today, but we're going to revisit this in the summer. So maybe not
Yeah,
next month,
basically,
but
he wanted a certain price. I do not know how much viable that is because that point, I mean, that part of the price part, only you or Albert or Hector can comment. So,
that's correct. That's correct. So now obviously we're doing our due diligence, and we're trying to help them set some type of understanding in terms of value versus the price. So, but
yeah,
we're
but
working on it.
yes, but I was happy because this person, he came on his own. Like, I mean, I do connect with people over Facebook, over the groups, like, and this
Yep.
person came over like on his own because one thing is I majorly do not push anybody to, take the services or something. I just message them, or I just tell them, okay, that's what we do. If you want, I can arrange a no obligation phone call or an appointment. I do not know how that person, like, he reached out.
Oh, good, good. Well, I think if you're out there, I think that's the beauty of just being present, just doing what you
Yeah.
can, whether or not you're on
Yes.
social media or just at some point, right, they're gonna find you. And that they're very similar. That I mean, from time to time, we get inquiries, to our site as well. And I don't do a ton of advertising. We do have automated social media that goes out, but again, I don't pay too much attention to that aspect. I just put it on autopilot through our system, and then every single, day, social media goes out. So we had a
Yeah.
customer, we had a customer that came in, and he was a developer. He has a project in Sunnyvale, and I think the total project is about $400 million or somewhat. And then, he was starting off with maybe $30 million of the first phase. So we handle, I mean, those are the type of clients that come in. You still need to vet these out because whenever I see individuals that are talking about projects of that size, I normally like to just take my time and do a lot more due diligence before, right, talking with anyone. And so, and I think you found similar things on Facebook as well. You just want to make sure you vet them out as well, correct?
Yes, but since he is a developer, I was hoping that once, if the person is right, of course, and if the deal goes through. So I was thinking that since he's a developer, maybe he will have some other projects in his basket and we can look at those things. Another thing I wanted to talk to you about, Perry, is the list that we have been working on. So you gave me the list wherein people have opened the emails that we have been sending them. And I think most of the list is exhausted. I think you also called up many people in that list. And I do not know. I think at least all those realtors are active for sure. That is why they're opening the emails and other things. But I have not been able to get any replies or anything.
Have you called them?
Yes.
Okay. And again, th from my experience, Asta, you get better with with quantity, right?
Yeah. Yes.
Um, and so when you are doing 80 to 100 calls on a daily basis, you will get better. And so
Yeah.
again, this is a whenever you're doing some type of outbound, whether or not it's on social media, whether or not it's phone calls, it is volume, and you got to be
Yeah.
able to get results. So your mindset should be on, well, I call through the list. It should be more like, hey, you know what? I want to call these individuals until I reach them. That's the mindset you want to have. I want to call these individuals, and if I reach out to these individuals more than 5 times and I can't get a hold of them, then I'm gonna say, okay, I'm gonna wait. I'm gonna put that on the back burner and then revisit that in the next month or so. That's how I approach things. Just because I have a list of 100 people doesn't mean that I'm gonna make one call and they're gonna be excited about talking to me. And no, I've got to make sure that
That's
I reach
true.
out to them, give them a script, give them my best value, and see if whether or not they have some type of service that I could provide. And if it's not a good time at this point, ask them, okay, well, when do you think I should follow up with you? Okay. And that's it. So the
That's,
goal of
yeah.
that list is to actually reach every single one of them, not just to go through it. So the mindset needs to adjust. Okay. Um, but at the same tone, at the same tone, currently right now, because I still have a personal team that does, because I do calls, but I still have my own personal, uh, what I call my personal virtual assistants making calls for me. So I make my own specific calls to specific partners on a weekly basis, but I also have my own team, my own personal team that I invest in for them to make calls. And so this is what their cadence is. Okay. They call from 9 to 12, right? Tuesday, Wednesdays, and Thursdays. Okay. And their goal is to make at least 100 calls a day. Okay. So I have 3 reps like that every single Tuesday, Wednesday, Thursday. And they generate appointments. We just got one today. So it works. This model works of just reaching out, calling, and scheduling, but you have to do it at a much higher volume. Okay. So again, I think what you're saying is well, you just got to ask yourself, not you've got to find out what's best for you because obviously um, I want you to feel as if you're being productive, but usually what it comes down to is that you're just not doing enough. Okay, you're just not doing enough. So
And
what that
also, I just wanted to I don't know, it's a long shot, but I know that you have given your exam long back ago. So because of anyways, all the work and everything is going on, I was studying for the exam also. Any tips for California exam?
well, I mean, it really depends on how you normally take tests. I'm a good tech. Me personally, I'm a good test taker. I've always
Mhm.
been very good at that. So what that means is that I can look at something and then I just, I remember it.
Okay.
But what I did do to prepare for that real estate exam, I took a crash course right before the exam. So normally they have weekend courses right before or the week before. And so I took the weekend course, and that helped me to understand how to answer the test. Okay, because most of the time, what they're asking you is not a logical exam. Okay, you may think that that's the right answer, but it's not. Okay, so that's
Yeah.
why I encourage you to invest in a weekend course specifically designed to help you pass the test, and they will tell
Yeah,
you
so
how
I
to
have
pass
been
the test.
taking practice tests because so these days the courses are also online. You don't have to go. So now I'm taking practice
I know,
tests.
but those that's not what I'm talking about. It's not practice
Oh,
courses. It just tells you exactly if it's more like when you see these keywords, this is the answer, regardless of what you think.
okay, let me look at
That's
it.
how this test works. If there's
Okay,
a
let me look for
keyword in
it
this
then.
particular question, this is the answer, regardless of what you think is the right answer. Okay?
Okay.
It doesn't matter about the practice tests. I mean, you know, sometimes doctors can't even pass this test for whatever reason. So it's not logical, it's not analytical. It's more like memorizing. You got to memorize a lot.
Yeah,
Okay?
yes.
You got to memorize, oh, okay, that's the key word. This is the answer. That's it. It doesn't make any sense, but that's the answer. That's how, that's
Okay, let me
uh,
look for those crash courses then. Thank you. Thank you, Barry.
not a problem. All right, Rick, how's everything coming along, Rick?
Good, good, good. How are you guys doing?
Good,
Can
good.
you can hear me, okay? Uh,
Absolutely.
okay. I'm making along, progress through the Facebook social media contacts and also the calls. One lead that I have is that this investor is looking to purchase property in Houston, but he's targeting brand new uh, housing. Uh, so he's asking me whether we can provide funding for that because he's debating whether to go with uh, the rates buy down that he got uh, uh, from the developer or versus going, with a broker like us.
Yeah. So is he planning on living there or renting those properties out or
Uh, haven't decided yet. He may be doing both. He's just looking into making a purchase because this is kind of funny. Some of his relatives are in Houston, and they are telling him that yeah, right now um, there are some good deals going on when you go to these new homes development.
yeah. Yeah, that's going to be a good scenario for him when it comes to the developer incentives. So
Right.
usually what happens is that because they're having a hard time selling their project or selling their homes,
Yep.
and if the developer has in-house financing, they will obviously invest a lot into the financing to buy down the rate or give them some type of incentive to use their in-house to sell their home. So it's hard to say if whether or not, if our programs are going to be better because it's like a traditional. If he goes and lives in there, it's just a traditional home loan. But if he's planning on renting it out, that's where he's going to find some challenges if he buys more than one property. So my best suggestion for you is, hey, it doesn't hurt to, um, understand what we can do and just do it from a comparison perspective. It's you know if we do a full credit report, it's not going to cost too much. It's a few dollars here and there just to run a full pre-approval, and then you can use that as either a comparison, go with us, or use it as leverage. But in those kind of scenarios, when you are dealing with a developer and it's somebody who's just going to buy a home and live there, it's usually a good deal when you're dealing directly with the developer.
Okay.
I would say if he's challenged, meaning maybe he's a business owner, right? Maybe he's self-employed. He doesn't have traditional financing documentation. That's where we're going to be able to provide much better financing options when it's non-traditional. Okay, so again,
Okay.
investors, they don't go to a job. Okay, they don't have a W-2 or paycheck. They're self-employed. Investors are, they have they generate revenue from their buildings, their projects, their investments. That's where we can help. Most of the lenders that are developer lenders, they're looking for the easy guy. They're looking for the individual who has good income, steady job, paychecks, great credit. Okay. If that client that you're talking about doesn't fit that guideline, then we could potentially help them. Okay.
Okay.
So if
Okay.
that helps, I would say to him, it doesn't hurt. We can obviously run a comparison and see if whether or not we can beat whatever they're offering. But in those scenarios, that's that's typically not our customer. Okay, that is called a rate shopper. Okay,
Okay.
rate shoppers. If they're rate shopping us, it's hard. That's where we become a commodity. Okay. And what I
Okay.
mean by that is that that's what every other loan officer does. They just compete on rates. That's not what we're trying to do. We can entertain the option, we can go through the scenario, but I think what you're looking for are saying, hey, Perry, he's looking to buy multiple rental properties out there. He's having issues because the bank doesn't allow him to buy more than one, and the in-house lender, right, is only giving him financing on this, but he can't financing two or three others, right? That's what you're looking for. You're looking for the hairy deals, the hard to close deals from an investor perspective.
Okay. Got it.
All right.
Rick, sorry, just a quick question. So like you said, I know that we specialize more in non-qualified mortgages, but just out of curiosity, because this has come up. So you're saying that if anybody who is a traditional mortgage seeker, that would not fit our basket?
Not necessarily in what I'm trying to do, right? Again, Asta, I think when it comes to the regular home buyer,
Yeah,
okay, that's a one-off deal. Okay. So
yeah.
after you close that, then you got to go right back to the drawing board and find another customer.
No, my question is if there is a regular person like you said, a person who's salaried and doing a normal job and they're looking to buy something. So if somebody reaches out to me, hey, since you work in the same industry, so my question is, should I try to connect them with the company or not?
Sure. I mean, we're never going to turn down business, right? But here's what, if I was in your shoes, right, Asta, when you're looking for financing and you have the option to go to Bank of America, Wells Fargo, anywhere that you can go, right?
Okay.
How do you eventually decide where to go?
I mean, see,
It's
at
going
the
to
end of,
either, at the end of the day, it's either going to be who's going to give me the lowest cost,
yeah.
right? And the lowest rate, okay?
Yes, and if it is the
Right?
same,
And if we are, well, you've got to look at it. If we are a brokerage and we get paid by percentage points, and they say, "Hey, Asta, can you do no points and no fees?" Would you be willing to do that? Would you be willing to do that deal for free?
yeah, of course, that's not possible.
Exactly. So again, we can always entertain that, Asta, but at the end of the day, is it
We
worth
won't
our
be
time?
able to match the big ones.
No, we probably will match it, but we won't make any money. That's what I'm trying
Okay.
to say. Does that make sense?
Yeah, kind of.
Yeah, because if you go to a bank, right? the loan officers there don't get paid on commission. They're not, they're not paid on point. They may be getting a portion, but they're paid salary. So
Uh,
they don't care what they're charging, right? They just care what the bank provides, okay? But they don't get paid commission like a mortgage broker does. Okay? Their
yeah.
salary. So if you can go to a bank, it's much cheaper to go to a bank than going to a broker. Now, if the bank can't do the loan, that's a different story, right? I went to Bank of America turned me down. Oh, then you have no other option but to go with Perry or Asta. That's a different story.
Okay, so do we also look at the LTV ratios in a different manner than banks?
No, it's all the same. But it comes down to it comes down to a few things. Their income qualification in terms of documentation they can provide, their credit scenario, right, and how much they're actually putting down or how much equity is in their property. So we look at all that criteria, okay? But the banks
Okay,
want all that criteria to be perfect within their guidelines. So, and if your client doesn't fit all those guidelines, they have no other option but to go somewhere else.
got
At the
it.
brokerage, our guidelines are expanded. Our guidelines are more flexible.
Oh,
Okay. A
okay,
bank's criteria is very rigid. Does that make
okay.
sense?
Yes, so but I'm sure that if we are keeping flexible boundaries and if we are keeping things flexible, then definitely we would be charging higher rates on those things, right?
We don't charge necessarily higher rates, but we charge fees. Our fees will be a lot
Yeah.
more. Okay. We can always match bank rates, okay, but it's going to come at a cost to the customer. So
Yeah.
there's what you call the rate, and then there are the closing costs. Okay. We can always compete on rate. Rate is not the issue, but at the end
Okay.
of the day, it's the cost. Okay.
Okay. All right. Thank you.
And so when it comes down to it, if say for instance we match a rate at a particular bank or another competitor, then it just comes down to costs. And so if if we have higher costs than another broker and they just still decide to go with us, why do you think that is?
Uh, I think that's because one thing is that something they're still hiding or still something is not right.
Well, it's going to be because they understand that we can get the deal done.
Yeah.
Okay? Because they know our track record, or they simply just like how we do business.
And also the flexibility, like you said, because definitely the big corporates, they cannot and they will never mold their roles.
But I think it goes, and I like that point because not just banks that we're competing with, but it's other mortgage brokers,
Yeah.
right? And so that's why in this business it is relationship based, and that's why
Yeah,
if
of course.
you and that and my big belief is build the right networks, okay? Call agents, okay? Work with investor types because it's relationship based. And whenever you start to compete on, this or next, then the relationship becomes too transactional. And when it comes to a transaction-based business, you won't last. The reason why we've been able to last for the past, 30 years is because we have been more relationship-based than transaction. Okay. Again, Tom and I, Eddie, Albert, we've all been working together for the past 30 years. Okay, that's why we've
Yeah.
been able to work together. That's why we're still in business together. Uh, it is all relationship based. Those that just look at clients and transactions as one-offs, it's hard to because that's not what I'm trying to teach you guys. I'm trying to teach you guys how to be in business for 30 years. Okay, and the reason and how you're able to compete with others is it's relationship. So if somebody comes with us, we may not necessarily be the cheapest, but they know that we can close deals. They know our service, right? And we treat our customers well. Right?
Yeah.
So There is two sides to what we do. There is the technical aspect, points, fees, but there's also the art side in terms of how do you deal with your customers when things are going wrong. Okay. Maybe they don't have a document that you need to be able to close a deal. I remember, I'll share this story right before I let you guys go. There was a story, I was working with a customer, and this was when I was working as just a loan officer. I wasn't a broker yet. I was working as a loan originator, and it was during Christmas time, and I was helping a first-time home buyer. Okay. I was helping a first-time home buyer buy her first home. Okay. And this was during Christmas. And during Christmas, okay, we were trying to close her loan, close the deal, but the underwriter, in one of the conditions, there was a condition. Okay, whenever you get a loan approval, there are going to be like certain conditions that you need to get and need to provide to the lender in order to close the deal. And this could be a lot, this could be a little. Okay, there's usually items that you need to provide. That's usually the toughest part, because if there's not a document that you can provide to the lender, the deal's not going to close. Okay, there was one document, okay, that the lender had asked for, and this was, this is closing time. They had already signed the loan documents, but what you can do is you can sign loan documents and then push funding to later. Okay, so you can always sign documents, but push the remaining conditions to later. And that's what we did in this trend. And it was a new home development. Okay, so she had bought a home, and I think it was in the Tracy area, back in the early 2000s, I believe, and during Christmas time. And she was she was a business owner. Okay, so there was a condition that the lender needed, and for whatever reason, the customer was not able to get it. Okay, and she had thought that she could get it, but and I forgot the detail of it, but there was one condition. So what do you do in that scenario? What do you do in that scenario when there's a condition on the loan approval that you need to provide to the bank or to the lender so that the deal can close, and you can't get that deal? Do you go back to the customer and say, listen, you're not going to be able to move in during Christmas. You're not going to be able to get your home, right? Your first home. Okay. Who are you going to upset? You're going to upset not just the client, you're going to upset the developer, because then the developer who's selling the house saying, oh, don't do business with Perry and his team because they can't close deals. So what do you do? Okay. So miraculously, what I did was, you know what? I've got to call the underwriter. And again, this is during Christmas holidays. Very hard to reach everybody. These are regular people with families. And, I didn't know if I was going to be able to reach anybody. So you've got to contact the investor, right? The investor is the individual who has the money to fund the deal. Not just the company, but you've got to talk to a specific person on that team, which is the underwriter. Okay, so every loan is approved by an underwriter. You've got to talk to that particular person, see if he's available, and then not only that, ask to see if or not they can what is called waive that condition. Okay, that is a hard feat to do. You go from this is what's needed to, hey, do you actually need this? Can we just ignore it? Can you just eliminate that so we can get this deal done? Okay. So miraculously, what happened? I was able to call during that holiday week, get a hold of the underwriter, ask them, hey, can we just waive that condition? My plea was, what am I supposed to tell my client? Am I supposed to tell them that they can't move in, that they can't buy? This is Christmas, right? Whatever I was able to say, okay, she made that exception. Okay, so it's not just. So my point is, when it comes to loans, what you guys normally see at the face value, that is the easy part. The hard part is actually understanding how to structure it, who to go to, and actually still sell it so that you can actually get that document, done, waived, and that loan eventually closed, right? So there's that back end scenario. And if you don't have that skill set, okay, to be able to communicate to people properly, to plead your case in some hard scenarios, it's going to be a challenge. Okay. So that's what people are paying for when it is a hard deal, right? When it's a hard to close, complicated scenario, that's what you're paying for. That's why we charge 1.5 points, 2 points on loans, because it's normally hard in how to get these deals done, structure it, work with the banks in order to actually get it funded. Okay. So again, the reason why I say this is if a client can go to a bank, get a loan for no cost, no fees, low rate, great, let them do it. That's not our market, right? Does that make sense, guys?
Yes, it does, and I feel like that's a great example into what exactly we're trying to do here, because it's literally about the situation. It's not about the number at the end of the day.
Exactly. And so the reason why we want to work on specific customers, and that's why I say, yeah, we don't want to turn down business. We'll definitely compete with the business. But at the end of the day, I want to make sure that everybody on our team gets paid. And when we work with a customer that is that wants to work with us, they understand that this is normally in challenging scenarios. It's not easy to do, but because we have a track record of closing hard to deal loans, that's where we want to make sure that we focus our attention on in building up our clientele. And then that's going to make a happier business for you. That's going to make a more profitable business for you. And then once they realize that we can close deals, the hard ones and the easy ones, then what Kevin had mentioned before, then the inbound referrals and more connections will start to come. All right. But again, guys, thank you so much. I'm going to leave it at that. But for those, Kevin, if you want to have another private conversation after what you've heard, let's connect offline, see where you're at in terms of going to the next steps or not. We'll definitely have a conversation around that. But Alan, it was good to hear from you again in terms of of asking good questions. But I'm glad that you joined our call. Rick, Asta, thank you for your input and insight. If there are any questions, and if you guys already have access, please drop them in the group or connect with me directly, and I'll be more than happy to help. But other than that, guys, thank you so much for attending the call, and I will talk with you guys soon. So let me know how I can help. All right, guys.